Good evening. So what I want to talk about tonight is kind of how we can find good entry points to pick up more physical gold and ways we can find out how the market is feeling and what's the most likely price action to occur over a period of time. Obviously, we haven't got a crystal ball, and we can only use these tools to try and help us, come up with a plan of action in the event that certain signals are triggered, which should enable us to make a purchase or maybe sell. So what you're looking at here is a gold sentiment score, and this was developed by a professor Hanke from a John Hopkins University. And basically, the way it works is it allows you to see at a glance the current situation in terms of what investor, what the market sentiment is towards gold right now. And the way it does this is it uses a algorithm to scrape from the internet thousands of articles that are based on precious metal investing, obviously gold, and it takes the keywords out of there and it analyzes them, to decide whether they've got a bearish sentiment or a bullish sentiment. And obviously, somewhere in the middle, they're neutral. And then based on that, it obviously does some calculations to move this gauge. And as you can see at the moment, we are right, right on the bullish side, which would be true. So this is quite a useful tool just to kind of gauge what the market is doing in terms of how it's feeling. I wouldn't base investing huge sums of money into gold just on this chart. I just think it's a tool that you can look at to just see what's going on. So yeah, that's the Hanke-Cofnas gold sentiment score, and I think it's available at goldsentimentscore.com or something like that. Just Google it, and we can see here, if we look at a chart, what's happened recently. Gold, actually earlier this month, a week ago, started to climb higher and come out of that sideways pattern that we've had for months, and now we're well over 1850, and it's consolidating nicely. And I really do think that we are looking at 1900 plus in the next few months if this carries on. And I base that on a number of factors, not just the gold sentiment gauge, just on a couple of indicators. We've got the 50-day moving average, which is breaking above the 200-day moving average here. That's one sign. I'm seeing the RSI is really not hitting anywhere near overbought, and we're basically seeing, in my limited opinion, a proper consolidation phase since this move up. It hasn't just gone completely crazy from 1800 smashed through to 1950. There's been a sharp move up, and obviously the CPI data from the Fed, which, if you don't know, inflation was up, I think, to 6.2%, which is the highest it's been for about 30 years, and it's supposed to be transitory. And really, I don't think that is the case. I think they've used inflation. Well, they're hoping they're going to be able to control inflation, I guess, with their toolbox, maybe by putting interest rates up, but that's just going to cripple millions of people. So we've got a bit of a problem coming down the line where inflation's getting out of control. You can't fight it with interest rate rises. They're hoping that it's transitory and it's just supply chain issues that are going to resolve themselves. Who knows? Maybe all of a sudden things will just clear out and it's going to be fine, But, only time will tell. So what we can see here is, some price consolidation around 1850, and I think the market wants to move higher. I think that if we have another report with inflation higher or the same, I think it's going to be boom. I think it's going to be. I can't see anything stopping $2,000 gold. In the UK, inflation is now at 4.2%. I think it was 3.2 the other day when it came out last time. That was 10-year high. And again, it's just the same thing that's going on in the UK as it is in America. It's just completely out of control. Inflation that can't be stopped. So yeah, that's just a couple of thoughts really. And I think that it's worth before you make a purchase. I always think that you should have a look around, see what's coming. The last significant purchase I made, I was relatively chuffed that I think I jumped in about 18. I think when I bought that Buffalo for spot, it was about 1828 or 1830 or something like that, which wasn't bad. Obviously, it's not mega bucks, but obviously now I'm beginning to think, what if it does move? It does suddenly start moving to, 1950, getting close to $1,000 an ounce, which is, in UK money, we're going to be back over 1500, well over 1500. Do I need to position myself and now for the future? So anyway, just some thoughts there. The Hanke-Cofnas gold sentiment score, worth checking out if you've got 5 minutes. And I hope you enjoyed that. Give us a thumbs up. Any comments, just leave them below, and I'll see you soon.